Hi, and good afternoon, everyone. May I get the sound test, please? Welcome to our mid-September open case studies. That's going to be also, this presentation is going to be also open to our social media students, either on Instagram, YouTube, pretty much everywhere. So today, actually, the timing was or is great because you've seen the potential of an IPO. In our example today, it was what was the symbol? Hold on a second. Frog. Why is it not on my watch list? But yeah, actually it is. Okay, guys, so you can see frog. This is an IPO that from actually 5 days ago. You know, it started the IPO day with a big leg down, and then we forget about it. Today it's coming up with a vengeance. And again, the idea here is that, you know, always put a potentially moving IPO in your watch list, or maybe put it down on a piece of paper, and then you'll see the symbol, you'll remember, you make the association, and you know sometimes the IPO is gonna float around for a month and you're not going to trade it. That's pretty much the example that I'm going to show today, where seemingly unimportant IPO from exactly a year ago is turning into a high-flying stock, actually thanks to a global epidemic. Anyway, let me open the turn on the recording. Guys, this session is being recorded under, let me see, open session. Let's call it open session September 2020. Open session. Okay, guys, so it's going to be called the Open Session September 2020. You'll need the recordings or the recording for the session today and tomorrow. You're going to need to email Clifton. As always, Clifton is ready with his email, clifton.tradenet.com, and that recording can be delivered to your email. Again, the point that we want to make today is that you don't forget a good IPO, even if it disappoints on the first day, even if it disappoints on the first month, something will happen eventually. We've seen this example with Zoom, which took some, some time to cook out, and Zoom was IPO'd a year ago exactly at 60, trading at 500 tomorrow, and not all the IPOs are BYND, which was IPO'd and pretty much moved higher from the get-go and never looked back in the first month or so. That was also the case with Tilray, which was IPO'd and a month later it was IPO'd at 20, a month later traded at 300, today at 5. So IPOs vary. However, this IPO is very much with us. Peloton. Let's move around. Go back to the charts of Peloton as we analyzed it 5 months ago. It was April 2020. So again, I hope everybody by now knows the business of Peloton. pretty much a gym in your home, a home gym. Instead of going out and training with others at the local gym, the gym comes to your home, including all the activities around it, instruments, trainers, a big thing and a happening thing for um, US US membership. And US membership, I guess, did not explode at the beginning. And this is basically the chart of Peloton for the first 7 months. It was IPO'd on September 26, exactly a year ago, at 26 or 27 bucks. Pretty much moved sideways. There was very little enthusiasm, as you can see from the chart. Very, very little enthusiasm, and the stock is moving higher for about a couple of months, then pulls back, and then disaster hits, and the stock takes a dive. As soon as the coronavirus hits the global markets. Guess what, guys? Those who sold and never looked back at Peloton because of the corona, you can see that the worst months were February and March 2020. Then the stock creates a double bottom at 18. And I'm guessing at one point people start to realize, okay, this stock is not going to be harmed by the coronavirus. Actually, it's going to come out as a small winner, and the stock starts to pick up, and then it reaches a decision point. This round number breakout on the daily chart. Why is it so important? Because as you see many times, those round numbers on the daily chart, 10, 20, 50, 80, 70 today for 70 today for frog. Let's go back actually one second to the chart so you'll see how important the round numbers are. This is frog, and let me draw the line intraday at 70. Actually, the highs of the day were 69, 30 in the morning, but the 70 breakout was pretty much clean. You can see that the pickup in volume came pretty much at 70. Exactly at 70, there was a big pickup in the volume. Let me move to the 5-minute bar so you'll see it clearly. Okay, this is the breakout at over 70, and you can see that this is the biggest volume bar since the morning session, and it's coming over lunch when the stock breaks 70 at 105. Okay, so this is how it looks on the intraday chart. If we move to the daily chart, this is 70. Above the peak of the 3-day reversal, still a round number, and the pickup in volume, and then I don't know what happened after, but if I'm looking at the intraday chart, the volume came in, or the volume started to kick in only after the stock moved over 75. So anyway, the algos picked it up. There was nothing really amazing showing for the move over 70. Then he posted it, I think it's 71 or 72. I'm not sure exactly where. He posted it at 72, and it still delivered nearly $7. That's 10% intraday. And again, this is an IPO that is alive now 5 days. Going back to our Peloton trade, it's not 70, it's 30. Keep in mind that 30 is a round number, 70 is a round number, 50 is a round number, 100 is a round number. It's an important round number. Okay. Now, is there anything special coming at 30? If there's news, of course, the move is going to be more successful on higher volume. If it's only a technical move, then it will fail near term, or it's not going to move very fast. But if it is a combination of the technical move and observation, news, and upgrade, whatever you want to call it, anything in addition to the technical move, this can be a boost for the stock, or a move over 20 or 30 or 40 can be a boost for the stock where it picks up a volume, screener pick it up, institutional traders pick it up, maybe an upgrade, maybe more media coverage, which is also very important, and especially for an IPO. IPO needs media coverage, and those over the weekend investors that spend time reading about stocks and act slowly, small, but many of them. There are very many of those over the weekend investors that act based on what they read over the weekend in the U.S. equity markets. So that's the weekly chart. Okay, nothing fancy. The stock is IPO'd at 25, 26, moves higher, pulls back nearly 50% lower during the coronavirus first 2 months, then picks up some volume and reaches this plateau at 30. Okay, this is the daily chart. Again, the volumes, very, very unimpressive. Momentum, maybe there's one momentum day every 2 or 3 months. The chart looks, kind of pale. Nobody's enthusiastic. It shows no enthusiasm for the stock immediately after the IPO. 2 months later, it's at the highs of the year. 2019. Pulls back because of the coronavirus, shows a double or triple bottom at 18. And we are back to the 30 resistance level. But what happens is that at one point, because of the coronavirus, gyms start to close down or are subject to the lockdowns. That's first in Europe, and then the trend moves over the ocean to New York and some other U.S. places, and then this is actually, it becomes actually an amazing opportunity for Peloton. I'm guessing that nobody, when they built that business plan, saw that the growth in this company is going to be coming from a global epidemic. Anyway, the IPO, when a stock is first IPO'd, it has very, very little correlation with the market, especially when this IPO, Peloton, is kind of a recreational product that has, of course, nothing to do with the S&P 500. There is no I would say, sports or anything that has to do with sports, sports-related product that I know that comprise or are part of an important ETF. And as it turns out, the most interesting ETF that relates or owns shares of Peloton is an ETF with a symbol iBuy. iBuy, it's called online retail ETF. And I don't know the components of this ETF, but it is the biggest ETF that's holding a 3.44 allocation invested in Peloton. So again, we want a benchmark. The reason why I'm talking about an ETF is that we want, it helps when you trade a stock to see the benchmark for that stock. That's why we trade Apple, we have the benchmark, the S&P. That's why we trade Facebook, we have the benchmark, the S&P. That's why we trade NVIDIA, benchmark semiconductors or the S&P. Financials, everybody I think at this point knows the benchmark, either the S&P. Let's simplify things. For us, the benchmark is the S&P. The question is the S&P the reliable benchmark for Peloton? And the answer, of course, is no. Okay, the answer is no, because S&P has 0 shares of Peloton invested in. So as it turns out, actually, not trusting the S&P when looking at Peloton is actually the right thing to do. Nevertheless, I'm sure that 99% of the traders in Peloton are still looking at the S&P when making the decision, or of course at the chart of Peloton, and they are not looking at this I buy very low volume ETF. Okay, but it's there. How do you find it? I will show it to you guys in a bit later. So the summary as Peloton approaches the coronavirus crisis in the first months of 2020 is a pullback from all-time highs, then a reverse higher from 18 lows of the year. And as you can see, there's some pickup in the volumes and daily ranges, which is very, very positive. This is how Peloton trades April 13. April 13, this is the day where the stock is going to break over 30. And again, the idea here is if you are a day trader, to start piling up in a position and not buy only the 30 breakout trade and start entering earlier. Now, is it something that you necessarily do or force? Not really, but if you can find an entry, for example, let's say 29.50, or you know what? Let me show you an example. We have plenty of examples today. This is, guys, frog, okay? And let's say that we want to buy frog at 70. Okay, so if you are if you're not a day trader, okay, you are a swing trader or an investor, and you want to buy the breakout at 70. Looking at the daily chart, assuming that you're going to take 5 to 10% stop loss on this trade, in this case, I will say 10%, or let's go with the lows of the day. Okay, so if I'm entering at 70, my stop loss is at 64, so that's how much is it? $6, nearly 8%. Okay. Anyway, this is a trade that's done, okay, based on the daily chart. It's not based on the intraday chart. This trade is done based on the 70 round number reversal trade. Okay. This is something that you prepare ahead of the trading day. Now, if you are a day trader and you're watching this chart and you are prepared to buy at 70, but you can find, for example, this entry at 67.70 or maybe 68, in this case, your risk on this trade is $1. It will be stupid for you to wait for 70 and risk, I don't know how much, 4 times as much, if you can trade this perfect VWAP support level and buy the 68, for example. So if you are a day trader looking for a move in frog, the chart is giving you a very, very easy trade. Take a look at this chart, guys. Now this is the 2-minute chart. You can easily see this bull flag formation, the round number. You enter way ahead of the breakout level, and if you want to add at the breakout level, so be it. But your risk on the trade is $1, which is in this case 1.5%, versus nearly 5 times as much, or the risk where swing trader will bear. So while the swing trader is going to bear a stop loss of $6, you're going to trade it with a stop loss of $1. That's the virtue of you as a day trader working your way in this trade versus a guy that just posts the trade and is off to work. Okay, so you spend time and it pays. In this case, that's of course the frog example. I can give you also today, because we had plenty of examples. Where is it? Pinterest. I mean, Pinterest is an IPO from more than a year ago. Still, the breakout over 40, and remember, guys, the round numbers are super important. Okay, the breakout over 40, and take a look at this trade. Remember, I was talking to you over lunch about this entry at 38. Sorry, at 39. What was the stop loss if you buy at 39? Worst case scenario is the VWAP. 38.70. So that's 30 cents. So I can trade, if I'm attuned to this trade, I can trade Pinterest with a 30-cent stop loss that's less than 1%, versus a swing trader that's going to buy it way higher at 40 with I would say 8% stop loss, maybe a 5% stop loss. I mean, the ratio is going to be way in my favor. Okay, the issue is going to be way in our favor. But we need to find the right entry. I mean, it's not guaranteed that you'll find the right entry. Sometimes you're going to stop out on the trade. Sometimes you won't be able to find the right entry. Sometimes you will take the right entry. In this case, those who bought the 39 and now the stock is at 40.50, and I won't be surprised to see it gap up tomorrow to 42. Definitely not. And then from then it's it's swing trade management. But this is not the purpose of our presentation. The purpose of the presentation is to show the importance of IPOs and the combination of the IPO and the round numbers on the daily chart. And you can find those, just act on them. So now going back to Peloton, April 13, that's the analogy is the same. Okay, so if you want to buy the 30, you can always place a stop order to buy a 30, and the stop loss is going to be in this case at the lows of the day. Okay, what is the lows of the day? As a day trader, you know at all times. As a swing trader, you have to wait. Okay, at least to see an established stop loss. If not, take a maybe another stop loss. But it cannot be a random number. It needs to be a prepared number. Anyway, 30 is a byproduct of this daily chart. Okay, so you can use 26 as stop loss. That's $6. That's $4. That's more than 10%. Doesn't make a lot of sense. Sorry, that's the weekly. If you look at the daily chart, maybe you can take $2. I mean, it's not really clear looking at the daily chart. What it's clear is that the entry is 30. I hope everybody understands why. Okay, everybody understands why this 30 is an important number for Peloton? First of all, it's a round number that's being tested from mid-February, then retested a couple of times in April. Then you'll see the triangle move higher. Then you see, or I'm assuming, I don't have a proof of that, some investors are already showing interest in the stock where the stock nearly doubles in a month. Okay, so you can see the volumes in March and April versus the volumes immediately after the IPO. So the volumes definitely are picking up, not substantially, not amazingly, but there's definitely a 100% pickup in volume versus the post IPO price action. Anyway, um, going back to the intraday chart, and now, okay, if you are not a day trader, your entry is 30. Let's say your stop loss is $2, 28. Fine. You post your entry. You go to work. You come back from work, and you see what happens. Adjust your stop loss and continue. If you are a winner for another day, and then you go a day at a time, and that's the job of a swing trader, working maybe 5 minutes to adjust those stop losses. If you are a day trader, you don't need to buy at 30. Of course, you can see the breakout. The first breakout is 28.95. In this case, the stop loss is the lows of the day. That's 28.50. So the risk on this trade is 50 cents versus nearly $2 for a swing trader. Not only that, you start the trade way earlier and with lesser risk. So by the time it reaches 30, you can already sell, if you so desire, half of your position, a dollar in the money. Okay, you can add there, you can do whatever you feel comfortable with, okay, as long as you have a plan. So again, the idea here is you take advantage of the round number on the daily chart. However, best is that you pre-enter and don't wait until the stock trades at 30. Now, let's say your entry is 30 and it's 9:45 in the morning. The stock opens at 29.95 or 29.90 or 29.80. Okay, so you buy 30. That's of course easy to enter. But if the stock opens at a substantially lower price, you've seen the example with Frog today. If the entry was 70, it opened at 60, I don't know, 65. Then you had an option to buy at 68, 69, 70. In this case, the stock opens and gives you an opportunity to buy at 29. In this case, 28.95. And this is a very good entry for a day trader. Again, if the concept is that you're looking for the 30 long on the daily chart, and then again, you have the option to unload half of your position or more, or if you trust the trade and feel comfortable, and this is a strategy, maybe add on the trade. Okay, it's all a matter of planning. In this case, of course, if you add on the trade, it's not breaking 30 yet, but after the big pullback, there's no more like clean setup. At least the one that we see between 9:30 and 10:30. Okay, so this is how the chart and the stock looks in the first 1 hour of trading, April 13, 2020, and the stock trades as high as 30, reverse lower to the VWAP, and an hour into the trading day, nothing really shows out. Okay, if you look at the volumes, nothing shows out. If you look at the move or the specific pattern, it tested 30, but let's face it, it doesn't look like an amazing move at this point. Again, only 1 hour into the trading day. Now, if we analyze the price action between 9:30 and 10:30, okay? Not 1, that's a mistake. It's 10:30. Let me save it. Okay. This is going back to the setup. Okay, it's clear that for a day trader, if you are in the business of buying the 30 in Peloton, this first breakout at 29 is viable and reasonable entry point. Now, is it worth a full position? I guess it's not. How important is this entry for a success over 30? Super important, because if you are already $1 in the money, even a failure at 30 and you're still not losing money. Okay, so you are already $1 in the money. You don't need to add over 30. If you do want to add, fine, but you don't need to add. You have a huge cushion by the time the stock reaches the breakout. And this is probably where the big move will happen, probably, based on my experience. So if you're looking at what will a day trader do between 9:30 and 10:30? Probably buy the first breakout. Probably hope to add over 30. And, this is pretty much the plan. Okay, based on the daily chart, this is the plan. Buy the first breakout, hope to survive the risk, and then decide what to do when the stock breaks over 30. And obviously, in this case, the answer is E, A plus V, because those are the right answers. The trend is unclear. It's not true. The trend is clear. And the trend is clear, and the target is clear. The daily is clear. The mission is clear. If the mission is clear, you stick to the mission. And it's always an easier trade when you know when you are prepared for it. And the daily chart, and just I want to remind everybody how the daily chart looks. This is the daily chart. So if you already observed the daily chart, you know that your mission is to buy this breakout over 30. And if you have a great entry point, in this case $1 cheaper, you're good. So regarding the analyzing the price action, it's clear what can happen. Now, how should a day trader manage the 29, or in this case 28.95 breakout? Do you buy at 28.95 or wait for 29? That's the first question here. I will give you my take on it, because first of all, I didn't do the trade. So if I'm looking at the level 2, I can tell you if I'm buying it before the breakout or wait for the 29 breakout. Most of the time, I will wait for the 29 breakout, unless I don't see a big seller there. Then I would pre-enter. Yeah, I agree. I agree that most of us, including me, will wait for the 29 breakout, because assuming there's going to be a big seller at 29, assuming that's a reasonable assumption that there's going to be a big seller at 29, you enter at 8.95 exactly before the breakout. Sometimes the trade it won't work, and you take a loser on it. The positive thing about this trade, however, is that it's very early on the day. The earlier on the day, I mean, you don't see the S&P 500 price action, and in this case, it's not that relevant. You don't see any benchmark, which can help. Okay, but assuming the market is not moving sharply lower or anything like crazy like that, no, it's early in the morning. That's also a very positive thing, because the earlier you get into the trade, the better are the chances that it's going to develop a good move. I mean, if you enter today, we entered today the trade at 40. it closed up 40 or 50 cents. That was amazing, but it was, let's face it, limited, because the entry was at 3:30 or something like that, maybe 3:20. So it had 40 minutes to the upside. Now, if you enter early in the morning, maybe at, I don't know, in this case, 9:40 or 9:50. Let me see the exact entry here. Yeah, it's very early, 9:50, something like that, or 9:45. Okay, the breakout. So in this case, you have almost 6 hours left in the trading day. Imagine the stock moving up 6 hours, or maybe moving up 3 out of those 6 hours, and sideways another 2 hours, and lower 1 hour. So it's still plenty of time for a huge move. So those are pretty much the ideas here. Okay, if you are prepared, willing to take the trade or the early trade, the 29 is your entry. And taking partials again depends on your plan. Maybe your plan is to buy a small position and add over 30. Maybe your plan is to buy a big position and unload on the way and keep a position if it reaches over 30. So I'm not going to dwell into that, but it needs to be a plan, okay? A thorough plan that can be executed. And as you can see here, it's not like a big deal to execute. Okay, you're not carrying 10 entries. You carry one entry at 29, maybe another entry at 30, maybe a partial, or you sell half of your position or a quarter of your position at 30. So it's pretty much straightforward, and not very easy to execute. Now, will the trade comply? We'll see about that. Okay, guys. So 9:30 to 12 noon. Be patient, but look what happens here. It's amazing. Okay, the stock trades from 29 to 30, does not break 30, then pulls back to the view up, moves sideways for more like I don't know, almost 2 hours. By the time that by 11 it retests the breakout entry. So if you're buying the breakout early in the morning, taking half of the partial and moving the stop loss to the entry, what happens in this case? This is very, very weird, but can happen and will happen. I don't know. I guess in 10% of the time, you'll have a good trade, then you have a pullback, then you have a retest of the breakout level, okay? And the retest of the breakout level, if you have the stop loss exactly there, you stop out and miss on the trade. And this is exactly what can happen and happens actually here if you do have the stop loss at the entry. How unlucky is that? But this is something that happens, I will say, no more than 10% of the time. This is again a super clean and helpful example where in this case you need, if you took a partial on the way from 29 to 30 and you see the pullback, you need to take into account that you'll need to either exit the trade and give up on the dream of trading at 30, or removing a stop loss, or being prepared to re-enter the trade, or be able to prepare to pre-enter, not exactly at 29, maybe at another level. Okay, this is definitely something that looks weird. Okay, to see a pullback before lunch to the entry point, actually breaching the entry point. Again, it's not happening very often. Okay, it's not happening very often, but it happens, I would say 10, 15% of the time, not more. That would have been very frustrating, especially if you are a day trader and now you're focusing on other trades. You have a stop loss at the entry, and you're not going to bother with a peloton all day. Basically, the stock is not doing much. Okay, so after being $1 in the money, assuming you took a partial, you move the stop loss to the entry. That's the trivial thing to do, and in this case, you do stop out. Again, the idea here is management. If you are a good manager, you can avoid it. If you are not attuned to it, to this trade, I guess you stop out and then you look out for another trade, which most of the time won't happen because you're definitely frustrated leaving $1 on the table on one hand, stopping out and then seeing the trade immediately move higher from that support level. That's really a bummer. And anyway, this is the type of trade that happens. Of course, if we're looking to analyze the price action between 10:30 and 12, okay, that's the price action between 10:30 and 12. Is the breakout over 30 a valid trade? And the answer, of course, it's a valid trade. Okay, first of all, because you have a clear and built-in stop loss, which can be, if you are a day trader, more like 30 cents. If you are a swing trader, in this case, $1. If you are an investor, worst case scenario, a percentage point that you're willing to risk on the trade, 3%, 5%, whatever. Okay, but the definition is clear. Based on the daily chart, 30 is a legit entry. Based on the intraday chart, 30 is a super legit entry. There's no problem. Volume is not a problem. Timing is not a problem. Risk is not a problem. Everything is upfront good, but in real life, right now, it's not. Guys, if anybody has a suggestion about anything, you want to make a comment, just let me know and I will stop the presentation. Again, for some of you, it can be a bit complicated. For others, it's simple. I'm trying to simplify things as much as I can, assuming that many people, especially on social media, did not take any classes with Tradenet, and in this case, some of the terminology is not really, easy to understand or clear enough. And you cannot, of course, ask me any questions because I'm not seeing your social media responses, if there are any responses. Okay, so if we want to summarize the chart until 12, amazing beginning, super disappointing reversal to the entry point, which means if what we do normally is take a partial, move stop loss to entry, and it retests the entry and then moves higher and not watching it. And if you're a day trader, you're really not watching it because there's nothing to see here in Peloton and you're out. And then you fight. It doesn't mean that you're out forever. You fight your way into this trade and you'll see that there are ways. Anyway, this is how it looks between 9:30 and 12. Very, very disappointing. Guys, look at the volumes at the bottom of the chart and you'll see that pretty much nothing is happening. I mean, everything is super mellow. That's until 12 noon. Guess what? This is the reaction between 12 noon and 1:30 p.m. Okay, so after retesting, let me enlarge this line. Okay, take a look. After retesting the entry, moving higher to 29.50, creating some type of a bull flag here at the VWAP, and then straight up over 30, straight up to 31.27. Now guess what, guys? Take a look at the biggest volume bar pretty much all day. Okay, the biggest volume bar pretty much all day is not happening in the morning session. Is not happening in the early session. It's happening exactly when the stock breaks over 30. Now, is it expected? Is it expected, or should you look for actually very good volume on the 30 breakout? What do you think, guys? And remember what we've seen today when a frog moved over 70, also over lunch. Frog moving over lunch at 70. Guess what is the biggest volume bar all day? Let me bring you back to frog. Take a look again. It's not a substantially increased bar, but everybody can see this 50,000, or in this case 46,925,000 share bar, 2-minute bar. In this case, sorry, 5-minute bar when the stock moves over 70, which is also the round number on the daily chart. So again, it's clear. Now, this is something, Jerome, that's beside your the volume. The increased volume is actually validating that this is the right entry. But again, you're not buying based on the volume. You're buying based on the chart and the risk reward. Now, if the volume is the byproduct and you'll see the pickup in volume, there is an increased chance that the trade is going to work. Because if you are the only one buying the breakout at 30, guess what? Not enough unless you buy 100,000 shares. Okay, assuming you buy 500 shares, it's not going to cut it, But if you buy 500 shares and 20 or 50 other swing traders or investors buy the breakout with their orders, somebody's going to buy 50 shares, others going to buy 2,000 shares. There's going to be a pickup in volume. And as you can see here, the pickup in volume, in this case for Peloton, is substantial. This is like 1,000% pickup in volume, exactly at 30. Now you can see it, you'll see it when it breaks, because you'll see the price action pick up, the volume pick up, the ask being hit repeatedly. Probably there's a big seller at the 30, probably, and the result is an immediate move higher. Now the stock moves from 30 to 31 plus in less than 25 minutes. So by the time the stock is at the highs of the day, okay, even if you entered at 30, you can protect yourself and take a big partial. Okay, so assuming your risk in this case is 50 cents, and this is a lunch trade where you trade 1-to-1, 30-50 is a easy peasy trade. Now you don't need to struggle and worry about the volume that much. Okay, this is a byproduct. You don't know exactly how big the volume bars are going to be. What you do know if you see a big seller, okay, at 30, that's a positive thing. So let's say you don't see a big seller at 30 versus you see a big seller. What is a big seller? Let's say in this case, 200,000 shares or 50,000 shares, a relatively big seller that you don't normally see on the stock. Okay, when you do see the big seller at the right number, okay, this is actually a positive thing. You can treat it as a positive thing versus as a negative thing, because it tells you, okay, above this big seller, okay, if the market is gonna hit the ask and eat all the shares that are offered at 30, at 30 or 2 or 1 or 3 or 4 or whatever, there's going to be less sellers. The breakout will probably work. Okay, so everybody is getting prepared to buy the 30, which is, a round number. Many traders are selling or taking profit. In this case, the reaction is perfect. First, the entry is straight up, no pullback, no nothing. Then it moves enough in the money for you to take a big partial and protect your position. You have also enough time probably to add if you are in a position, assuming you want to add. And again, the validation is very important as well. But even without the validation, assuming the move is the same, volume is not picking up. Okay, so the volume is not picking up. It's not going to be do or die for this trade. As long as the trade works, maybe slower, of course, but as long as it works, you're good. So I will have to say that the pickup in volume is super important. Seeing a big seller at the breakout level, super important as well. But if the stock continues higher, despite no pickup in volume and you don't see a big the big seller, still it's good. We always study volume on stocks that go very favorable. Do we study stocks? There are many examples where trades don't work. Okay. Now the idea why you traded or the idea why we traded or wanted to trade Peloton is 30 is to decrease the probability that the trade is not going to work. But we had plenty of examples this year where breakouts on the daily chart work or worked. Okay, breakouts on the daily chart associated with good volume and round numbers work. Now, what is the big deal if it's not working? You have your plan prepared. In this case, you buy at 30, stop loss is 29.50. Okay, so it goes down to 29.50 and you lose 50 cents. What is the lesson from that? Okay, sometimes there is no lesson. The recording of the session is being recorded by Clifton Sankar. So if you need a recording, you just email Clifton tomorrow morning, okay? Basically, the recordings are in the room. He's going to give you a link, and you can access the recording, or maybe the recording itself. I'm not sure exactly what, but again, tomorrow morning, just email or PM Clifton for that. Best thing is email. Okay, guys, is it clear the way we treat 30? I mean, it's binary. It's either gonna do money or not. 50 cents to the downside, you're out. Not a big deal. up at least 50 cents for a partial during the lunch session, and you're in the money. Okay, so what's happening here is that there is a combination of intraday and daily. Daily is very, very technical. Okay, intraday is also in this case good enough to trade. Now, let's say that the volumes in Peloton are very, very low. Okay, volumes are very low. You don't see anything interesting. It's also super spready. Okay, so you don't buy the 30 breakout. Okay, so nobody pushes the gun to your head to execute a trade that's not up to your standards. So let's say the stock is has 20-cent spreads, trades 150,000 shares. Why would you bother with it? Throw it away, look for other trades. Again, there's no one trade that you're hooked up, need to be hooked up on. I mean, there are 10,000 shares in the US markets. If this one does not fit for whatever reason, volume, spreads, pattern, whatever you want to call it, just throw it away, erase the symbol from your watch list, and move on to your next plan. Okay, and there should be plans for you, either from the top 20, either for the stock list, either from other list, preferred list that you prepared prior to the trading day. So you have the trading room. I mean, you're not gonna just sit there. Trust me on that. Now, analyzing the 30 breakout, where should the day trader take the partials? Okay, let's say we buy this trade, the 30 breakout. Where would the day trader take a partial? If this is my only entry, okay? If I'm buying it and 30 is my only entry, where do I take the partial? Yeah, simple. Now, what I would have, what I would say here, don't set it up as a fixed price, okay? Don't set it up. Sometimes the move will be higher, okay? It's going to go through 30.50. And if you just take it at 30.50, you may miss on, I don't know, 30 cents, 40 cents. In this case, another 77 cents, okay? So the idea here is to be patient, observe, and sometimes, especially when you see the pickup in volume, validate and don't sell, okay? Just follow the trade and try not to sell. Now, if you are under pressure, you had a bad day, you want to make up for other trades, of course you're going to sell. Maybe not even wait for 30.50. The idea here, this is of course an optimal trade that's showing here on the chart, but some other trades will work 40 cents, you wait for the 30.50 and there's nothing. Okay, then they're going to come back to the entry and demise. There will be nothing. Okay, the example here is a successful one because the successful trades need also interesting and super accurate combination between the daily and the intraday, and timing is of course crucial. Okay, so in this case you have a daily chart and an intraday chart that combine to be a perfect chart. And then you have now the execution at 30 with increased volume. It goes straight to 31.27. And it's a lunch trade, basically. Okay, so if you take 50 cents on the first partial, move the stop loss to the entry, in this case, and maybe take another partial at 31, that's great. So you can take, I would have taken two partials here. At 30.50, maybe at 31. No way I'm letting $1 trade on a $30 stock go by without selling another part of my position. I don't know if it is a quarter, another third, maybe less, but no way I'm letting so much money on the table. And this is 12:30. Again, if it is $150 or $200 stock, you need to be more patient and you wait for maybe $2-3. Remember, guys, the breakout over lunch in ZM today from I think 390 or 370. I don't remember the number, but it took some time, and eventually what? It ended up being a $10 winner, a $10 winner during lunch. And again, it took 2 hours or whatever. We'll see. I will go back to the ZM in a bit, but it was a $10 winner over lunch. So if Peloton is a $1 winner over lunch, it's a $30 stock. It's not a $400 stock. You cannot complain. Actually, it's a great trade in retrospect. And this is how it looks after at 1:30. Okay, established 30.50, established 31.27, highs of the day, and a pullback. So the risk on this trade, if the risk is 50 cents, then the target is initial target is 50 cents. If the risk is more than that, and it shouldn't be, but let's say it is, okay, so you adjust the risk to the first target and try to be smart. So if the risk is, let's say, 62 cents, okay, and you see a big seller in the stock at 30.50. You see a big seller at 30.50. Maybe you don't need, or you don't need to wait for 30.50 and you sell your partial at 30.45, and then you wait for the second partial to become the big winner, which will happen on many occasions. Okay. Again, it's a type of management which is instead of waiting for the first partial to be my big winner, I'm letting the partial fast, or taking the partial fast and letting the second partial, in this case, $1, maybe up to as high as 31, maybe 31.10, but obviously 31 easy in the money. And now things are not, after the break over 30, things are not being complicated anymore. You can see that the stock basically continues to trade higher until 3 p.m. Then it's over at 31.50, highs of the day. And the end of the trading day, hold on a second. This is how the market looks. At the end of the trading day, closing at 32. So basically, the 30 breakout over lunch with a big volume paid for a leg up, then a pullback, and then the stock trades or trends higher into the close and closes near the highs of the day, showing amazing strength. Also, very good volume late in the day. Perfect. You started the trade at 30, you ended up at 32. Okay, maybe you have half of your position, maybe a quarter of your position with your original position, but this is a clear winner. Okay, this is a clear winner, and $2 in the money. That's 7% in the money on a $30 stock. Plenty, unless you know that there are earnings overnight, and then you don't stay in the trade. But if you do want to stay in the trade, 7% in the money is way above expectations. Guys, if anybody has a question, go ahead. I will continue with the summary. Analyzing the price action between 3 and 4 p.m. Are there any new entry points for Peloton? 3 and 4 p.m. This is pretty much the channel that I'm looking at. So if you do observe the channel, guys, and you see that the channel is accurate and any pullback is being bought by the algos, you can join. Most of the time you will make mistakes trading channels. Trading channels is a pure computer play. Okay, we like to trade breakouts. Okay, trading these sideways moving charts is more complex. Anyway, I'm trying to stay away from trading them, but if the stock works in your favor and you observe it, fine. It's actually a very positive thing for your position because then you know that algos are buying. If the more accurate the chart, more algos are buying. So analyzing there are no more no more entries in the trade. Now at 3:55 p.m., what is the next step for a swing trader? Okay, let's say you are in a position. Okay, you started the trade at 30. You are a swing trader. The stock closes at 32. What are your next steps that you're going to do as a swing trader? Swing the remaining position, stop loss to entry. In this case, 30. Close at the highs. Is a positive thing, then therefore you can swing the position. We'll see. So we have swing the remaining position, move stop loss to entry. B, the close at the high signals more upside. I mean, in this case, tomorrow, swing the position. Swing 1 quarter is an option, being aware of the risks. D, in this market, best exercise caution, no swing trades in whatever, but that's not the issue. Swing trading is risky, and swing traders are aware of the risk. However, the breakout pattern and the close at daily highs suggest more upside. Basically, A is right, B is right, and E is right as well. So the idea here is again to take partials based on your strategy. I take 2 partials, half and a quarter, and normally the last quarter will be the swing trade. Okay, unless it's a small cap. If it is a small cap, my policy is to go only half and half, or I don't have enough shares, half and half. But if I have a big enough position, I will go half, quarter, or sometimes 1/3, 1/3, 1/3. So it's not going to be a big issue. The idea here again is that if you are a swing trader, okay, and you're not coming to the trading day the day after, you need to prepare yourself and do the stop losses and everything that you need to do or prepare for the next trading day. Okay, you do it and prepare for it. It's not something that you do trivial, very trivial in the morning when you need to pretty much wake up and go to work, and now you're spending time checking trades. It needs to be done without pressure, without the market moving. Now, this is the Peloton summary, nothing special here, other than the observation that it has a below average SPY intraday correlation, which means Peloton is an independent. SPY moves down, the stock is liable to move up, or the other way around. It doesn't have a 100% negative relationship with the market, but the worse the market does, basically the best moves are going to be coming for Peloton in retrospect. Now let's see, guys, two observations. The stats in the stock as of April 2020, those were the stats in the stock in April 2020. And the stats of September 2020 coming up as well. So again, if you look at the Peloton stats as of April, the volume is 7 point, let's go to nearly 9 million shares. Shares outstanding, as you can see, 43 millions. Institutions are holding half a position of the shares. Short float is 42%. 42% short float 3 months or 5 months after the IPO. Can you imagine that, guys? Okay? The short traders, the short sellers are not believing the good fortune of Peloton. They are loaded up with big positions in the stock. This is the now the number. Hold on a second. That I found today on Yahoo Finance. Average volume jumped from 7 million to 14 million. Average volume jumped 100%. The number of shares outstanding also grew. Okay? The number of institution holding shares is pretty much the same. Everything the same. That there are two very important pieces of data here. First of all, hold on a second. Why is it not working? You can see that, first of all, daily average volume in April is 7.6 millions. Yesterday, the number for the stock is 14 million. Shares outstanding, you can see nearly 240 millions versus only 43 millions 9 months ago or 8 months ago. And the question is, what happened here? I couldn't find. I mean, I couldn't go back that much and see what happens because there are so many pieces of news in Peloton. So many. Okay, let's recap. And guys, first of all, any questions regarding the data so far? No questions. It's super clear. Now you can find for us tomorrow an IPO. When I say IPO, stock that was IPO'd a couple of months ago with a breakout trade on the daily chart. What do you mean? How do you watch all that data? You mean the data that I just read from Yahoo Finance while trading? I don't care about that data. Okay. The data is something that I will look in the pre-market or in the aftermarket, but it's not something that will be a factor. Okay? The priority list is based on the patterns on the daily chart. Like I said, you do your own watch list, okay? And the market is going to give you every day dozens of stocks to look at based on the top 20 or the stock screener. Okay, so you take out of those hundreds of stocks that you follow every day, you take very few, maybe 3, maybe 4, maybe 5, and you add them to your watch list and again observe the daily chart. And if the daily chart is showing strength and a breakout over a round number like 5, 10, 15, 20, something in that ballpark, that's where you want to have your next trade. Okay, assuming the trend is higher, volume is good, no spreads. Okay, but again, the most important thing is the chart. Okay, when you trade, you ignore all the data that you heard in the background or read from Yahoo Finance. That's not going to help you intraday. So whether there are 5 million short or 4.3, who cares? Basically, when you day trade or swing trade, okay. I said no. I don't use any analysis other than the chart analysis in the opening drive. Okay, all the other analyses from Yahoo Finance or Bloomberg or Reuters, not very helpful. All it's helpful is this chart. Okay, at the beginning, this is the chart that you face, the 9:30 to 10:30, and you deal with that. And if you can deal with that, then you deal with 10:30 to 1 and 1 to 3 and 3 to 5. Okay? So it's very simple. Nothing is overwhelming. Nothing is overwhelming. I mean, everything is all about this chart. And if you have a plan and your plan is to buy at 30, but you can buy at 29, you exercise that option. Okay, Jerome? Clear? Now, I assume you didn't take the case studies course with us. I assume that you did take the Star Trader class. Okay? In order to fully understand those cases, and next week we're going to have new cases. Okay? The best thing to do is, of course, practice them couple of times, at least read them once or twice. And of course, take the Star Trader class, because the basis of all these trades and concepts is the Star Trader class. So if we look at, guys, at the statistics before and after, we definitely don't see anything amazing or anything different, other than more shares versus lesser short float. Okay, short float normally was 42. Actually, it's pretty much the same. So we recap what we've seen here. A stock that trades higher from the lows, showing a triple bottom or a double bottom, hits and tests the 30 round number for over more than a month. Okay, it has a clear uptrend. So right now we have the round number 30 on the daily chart, consolidation for a breakout on the daily chart, relatively low risk on the daily chart, relatively good volume. But what do I look for when it breaks 30? Can I look for $10? Mostly people will look for 10 to 20%. Okay, on this trade. This is the breakout day. You can see, guys, the breakout day. The stock closes at the highs of the day. That's, of course, April 13. Close at the highs of the day. April 14, hammer. April 15, another big leg up, and now the stock trades over 36. So 2 days after the stock breaks 30, it's already at 36, up 20%. 20%, guys, in 3 days. That's amazing. And that's all part of the 30 festival. Okay, that's all part of the 30 festival. You can see also the pickup in volume at the bottom of the chart. Guess what? Fourth day, and the stock reaches 38. Fifth day, sixth day, and then there is a pullback. 4 days to the upside to 38.08, all-time highs for Peloton, and then the stock moves lower for 1, 2, 3, 4, 5, nearly 10 days to retest the 30. But this move up and this leg down normally are creating some type of a pyramid move, and this pyramid move repeats itself over and over and over for big moves. Okay, for moves that are mostly straight up and straight down, and those straight up moves are a pyramid for the straight down moves many times. And now we see the chart of Peloton going back to the breakout over 30. So how is Peloton now $90 stock? Okay, 5 months later, because it started the trade at 30, then it moves over 50, then over 60, then over 70, 80, and whatever. But there are a couple of very technical entry points along the way that propel the stock from 30 to 60. 30 to 60 is 100%. It's amazing. Okay, nobody expects more, and there is another 50% to the upside. Now you want to read about how potent and important Peloton is. Just open Yahoo Finance. Okay, just open Yahoo Finance, type in the symbol, and start reading. Okay, you read plenty of analysts, you read covers for the stock, and you can easily read why Peloton rose yesterday, even though the market was sharply lower. And again, this is something that we know. Why is Peloton moving higher when the market is moving lower? Because this is the business of Peloton, taking advantage of those businesses that are closed. In this case, of course, gyms that are closed, and the money, some of the money, if not all of it, is fusing into their own in-home business. Now, before we summarize everything, okay, this is also very important to read, understand. Okay, how big is the exposure of Peloton versus ETFs? Okay, so you can see here 56 ETFs are holding 9 million shares of Peloton. Not a big deal, okay, but still way more than 6 months ago. I don't have the data for 6 months ago, but I guarantee you that there were less ETFs holding PTON at 30 versus much more ETFs holding Peloton at 80 or 90. And again, this iBuy Amplify Online Retail ETF, where iBuy is the largest, has the largest allocation for Peloton. Okay, we're pretty much in line and in time, an hour and a half. I have another case for tomorrow. Actually, I have two more cases for tomorrow, but that's only if I can. I will be able to go through two cases only if I'm going to go very fast, and it's up to you guys. Assuming that most of you guys on social media have yet to be evolved with this type of analysis, I will stick to only one case. Maybe I can get to the second one tomorrow. At this point, guys, if anybody has a question or questions, and even if you don't have right now any questions, this is my email. Again, Jerome, it's not very easy to find this type of setups. You work for that. It's not every day, but today you had Frog and Pinterest. You had not the same setups, but similar setups in Frog and Pinterest. Okay, so the timing to show you another IPO, both of them are IPOs from a year ago. Okay, Frog is actually a fresh IPO, Pinterest an IPO from a year ago, but the concept is the same concept. Round number entry. If you can find a pre-entry, do it, and go and stick to the trade. That's and again, it doesn't need to be a successful IPO in the first 2 months, and 4 months later is a super successful IPO. Now, how do you find the benchmark? You go to ETF.com. Just go, Gulam, go to ETF.com, okay? Or just, you can send me the question and I will send you the link. Again, it's very simple, ETF.com. No, 29 is not considered a round number, okay? But if you see a consolidation under 29, okay? And 29 is a tested level. So why wait for 30? You buy the 29. Basically, the round numbers are 5, 10, 15, 20, 30, 40, 50. Okay, 103 is not a round number. 110 is a round number. Okay, so that's, it's more like semantics. Again, depends. For a $300 stock, it's not, if the stock is $300, so it's 300, 310. It's not going to be a multiple of 5. However, let's say, okay, then the stock hits 305, I don't know, 20 times. Okay, so you make a notice and you buy it 305. Okay, so it's nothing is golden rule. There are no golden rules. Okay, or strict rules. If you can observe on the chart a better rule and make a rule out of 305 instead of 310, fine. But I want to go as far as 307.50. Is this a round number? No, it isn't. It can still be a very good entry point. Okay, 307.50 can be a very good entry point intraday or on the daily chart without being a round number. It helps though when the round number is so obvious, like in this case. 30. It doesn't get rounder than 30. Okay. Okay, guys. If there are no more questions, again, feel free to email me with any question. Yeah, again, pins at 40, but is the pins at 40 a good trade? Not really. The 39 was much better. Okay, 39 was way better than 40. Maybe there were actually better trades than 39 as well. Okay, so again, if you bought it at 38 and added at 40, super great, really. But I saw it, for example, at 39, and I watched the daily, and I thought, boy, this 40 looks great. But I do want to pre-enter. Okay, if I can pre-enter, I will. And we'll see tomorrow morning what's going to happen. I mean, maybe it's not over for 40. Maybe it's going to gap down and we can retry the 40 again. We'll see tomorrow morning. Or maybe 41 is going to be the next best trade for Pinterest. Thanks a lot for being here, guys. We meet again tomorrow with at least one more case. Clifton, thanks a lot for being here. Have a good night, everybody. Again, if anybody has a question, feel free to email me, and we'll see you guys tomorrow. Good night.